morning, everyone. Welcome back to The Pulse here, hosted by the PeakBot team. I'm Dillon, co-founder of PeakBot, joined by my co-host and co-founder, Ben. We're back. It's 2024. Everybody be ready to write the wrong year down or type the wrong year for about a month. We are excited to be bringing you a lot more automation and a lot more exploration here this year. So we are excited to get into it. Regularly scheduled agenda for today. We'll be handing it off to Ben here in just a minute to take a closer look at our watch list and a couple charts. We will, of course, encourage questions along the way. Please don't be shy. And we're okay if you are, but last few shows have been relatively quiet. So come on up. If there's a chart that you want us to look at, if there are questions you want us to answer on our automations, or really anything at all, don't be shy. Let us know. And if you didn't want to ask during the live show here, that's no worries. You can text or call us at the number below on the screen, or even schedule your personal demo at the link below. Real quickly, we'll get it out of the way. This is not financial advice. We're not financial advisors. Ben, we still got to talk to our partner. Get ourselves a mug.
Not financial advice. Yeah, we definitely need one of those mugs.
But
our legal counsel definitely appreciates that we say that multiple times per show.
For sure. So really quick before we get into it, I wanted to make an announcement as a longtime struggling retail trader myself. Keep in mind, Ben and our team, they're more of the nerds who coded these algorithms. I'm the everyday guy who needed to use them but didn't have a clue as to how when we started this business a few years ago. But proud to report that this past year, 2023, the fiscal year, in my PeakBot trading portfolio, I was able to return 29%, which I'm pumped about.
Well done. Well done.
Very excited about
this.
That.
This is a feat. Because Dillon, like he says, has never made money in the market before. This was the first year.
Yeah, I've been trading since 2018, and I've been unsuccessful. Most of those years I was trading equities, trying to swing trade equities. But I've moved over to the option selling side, specifically trading the wheel. That 29% is all because of the wheel strategy, untouched by Dillon. Well, of course, I'm managing my stock picks in PeakBot, but that's only once a week here for you guys. If I wasn't co-founder, I say this all the time, I wouldn't be touching my portfolio nearly this often. But since we've carved out the time for it, I do. But yeah, 29%, and most of that was on the year where we didn't have the hedge built into our wheel. I forget. Business. Yeah, right. So I was unprotected, but now I'm hedging the wheel, so that means I have even higher expectations for 2024, especially once we get this trend spread bot out, which is a little teaser for anybody watching. I know you've heard us talk about it. Don't worry, it's coming. And I think it'll be the new fan favorite, as it'll give us the ability to lock in profits regardless of the direction of the stock, both bullish and bearish. So one other quick ad lib here. We do have the new layout, the new PeakBot app interface live, which we're excited to show you on this call here this morning.
New year, new us.
Yep, new year, new PeakBot. So we have that to show you. Again, we always pride ourselves on transparency. There's a couple little kinks. We're making sure the watch list and the results are now in app. So we're working on that. If there's anything you notice, you just let us know, but has no effect on the actual trades being made. Everything looks crisp and clean. We got some charts. We got light mode, dark mode. We'll get to that in a little bit. So Ben, cool. Why don't I hand it off to you? Keep in mind, everybody, another short week. It's Tuesday. No more short weeks for a while. I don't think.
Maybe President's Day.
Okay.
So off the top of my head.
Yep. So 4-day week, wheel contracts will enter today. Anybody trading the Iron Condor will enter today. And yeah, that's it. So I'll hand it off to Ben, and we'll do it.
So like Dillon said, guys, feel free to pop questions into the chat. We're happy to answer those. If you guys have stocks you want us to look at, happy to talk about those as well. But I'm going to go ahead and pull up the watch list here. And I feel like we're talking every week about an update made to this watch list. So between the update I'm about to talk about and our new layout, I'm actually not going to go over how we compile this watch list today. Now, normally we would do that. We would have a bar chart. If you are interested and you're not sure how to compile a watch list the way that we're compiling our watch list, go back to a previous episode. Every episode before this will have it. But for the sake of time right now, I'm not going to go over that. And by the way, the recommendation here is just use our watch list. So we've done all the heavy lifting for you. We've curated all the data, and here it is right in front of you. So the big update since last week on this watch list is we've now included a column for trend. Now, this is just a basic trend direction that we're pointing out here. We've got bullish, we've got bearish, and we've got neutral here. So I'm going to change the coloring between earnings reports and neutral, so that way that's not confusing, because I just confused myself.
Yep.
But if you are looking for details on how that is determined, if you scroll right, and this goes for both the wheel hedged and the wheel unhedged watch list here, you get a lot more detail. And just to quickly go over it, we're looking at the 67-day EMA. We chose 67-day EMA because that's just about 3 months of trading days. And we want to see that the daily EMA has trended up at least 2 of the last 3 days and at least 6 of the last 10 trading days. So that would trigger a bullish trend. A bearish trend is just the exact opposite of that. And then there is some room in between where we could signal that a stock is relatively flat, and in which case, we're trading the wheel here. So a flat market isn't necessarily bad. In fact, when you're on the put side of the wheel strategy, you're typically looking for bullish or neutral stocks, because we want to stay above that strike price that we're selling. So that way we collect all of our premium and there's no obligation for us to purchase any shares at the end of at expiration. So we're trading weekly contracts here. We've simplified, of course, as we know, we've simplified the upfront part of this list here. We are showing the company name and ticker symbol. We are showing the estimated cash needed if you were to be assigned shares. We're showing the estimated maximum loss, and that loss is calculated by the width of the spread that we're selling. And then we've got our estimated net premium. And then, of course, we sort all of this by our estimated return on cash needed. So if you take your premium and divide that into your cash needed, you get a certain percentage. And this is typically how, at least we've seen people set up their automations within PeakBot. They're taking a look at this list and they're adjusting their positions for their comfort level. Now, we know Dillon has a certain set of rules. On a normal trading week, he'll look for stocks returning, in this column at least, between 0.5% and 1.5%. Of course, up to you to do the due diligence yourself, determine what you're comfortable with, determine if you actually like the company that you're trading. I mean, we always say, like, don't trade anything that you don't want to own. If you don't know what a company does, why are you trading it? You should always have some underlying knowledge of a company before trading it, so you're comfortable if you do get assigned those shares.
Really quick, Ben, if you don't mind me making a comment.
Yeah.
So the max loss column for traders who are maybe more new to the game here, they look at that and that number tends to scare them a bit. But if we take a look at this more detailed version of the watch list, and Ben, a thought out loud, not that this is necessary, maybe a little tricky for us, but I think we should try to get so I'm going to veer off that for a second. Walgreens is reporting earnings this week. You can tell that in the other watch list, but you can't tell here. Maybe that's a fix for us. Maybe not.
I can add that.
Okay. So if we go back to the max loss, so really the max loss is being created by your strike prices and the spread between them. As you can see, what's highlighted on the screen here, Ben has our sold strike is $24.50 for this Walgreens. Our bought strike is $22.50, which means there's $2 in between our strike price. Our max loss is $2 times 100, which is $200. The reason for that is because if Walgreens was to drop below 22.50 this week, which again, they're reporting earnings, so take caution there. If it was to drop below 22.50, you're no longer being assigned to the shares. You are going to take your $200 max loss and you will stay on the put side of things for the following week, as opposed to, let's say the stock falls to $20 a share. Well, you don't want to be digging out of that hole, right? So this is a hedge on your bet. This is an insurance policy. That max loss, statistically speaking, happens about 10% or slightly less than 10% of the time. Okay, keep that in mind. This isn't something that's always happening. So max loss is there, only happens on paper about 10% of the time, and that's being pulled from the 10 delta. So just wanted to share that.
Yeah, no, great to point that out. And then, that's the max loss, right? But what's the probability of winning here, right? And if we set our strike at the 30 delta, that, statistically puts us in a position where we're going to be winning 70% of our trades. Now, it's going to be the 30 delta or closer to zero, right? So sometimes there won't be a strike directly at the 30 delta. It could be at the 25. It could be at the 20 delta. Again, statistically speaking, if you just take 1 minus that decimal number there, in this case 0.3, then you should get a 0.7, and that's your statistical chances of that position finishing out of the money, which is good for us. That means we are making money, because at the end of the contract at expiration, there's no obligation for us to buy any shares. So again, there is that detailed version of the watch list. There's the more simple version of the watch list right here. As Dillon pointed out, we've got Walgreens reporting earnings this week. And that actually was one of the stocks that I wanted to pull up on a chart on Tradier and kind of look through that. We've got a bullish trend, as we can see, based on our indicator that we've built out. We've got earnings coming up on Thursday, and we've got Walgreens, estimating about a 1.4% return, so about $34. Again, all of this could change when the market actually opens. We're working with the best data we've got. We update this at 5 a.m. on trading days, which are Mondays and Tuesdays for the wheel. And then we update this list every day automatically at 8 p.m. Eastern. So if we take a look at Walgreens chart here, I like going over to Tradier. I like taking a look at the 1 month chart, just because I want to get a sense of what direction are we headed in. Are we heading in the short term, right? Because we're selling weekly options here. So I don't, I do take into consideration the total year's movement, but if we look at just the past month, we've got a pretty nice trend upwards, and that kind of matches up with what we're saying in the watch list here, where we've got this bullish trend. So we confirm that on the chart here, and then Tradier also has this nice tool at the bottom of the chart, technical analysis for whatever stock we've got on the screen here. So this looks through a number of technical indicators, and then ultimately gives us a gauge here with whether the stock is a strong sell, a sell, neutral buy, or strong buy per these technical indicators. So I like to switch this to 1 week. And if we do that, we see that, okay, well, actually Walgreens kind of looks like a neutral. So
Very neutral.
Again, trading the wheel strategy, if we're just getting in now, we're looking for a strong buy or a neutral signal. I feel much more comfortable personally with a strong buy, but there's still potential to make money. Now, I would say, again, Walgreens is reporting earnings this week. That typically causes higher volatility within the stock. Higher volatility means more risk. More risk equals more reward. I can tell you from experience that Walgreens is never this high on the list. So if you did get assigned shares, if you did play Walgreens this week and you did get assigned shares, I wouldn't expect to receive, this type of 1.4% return on your capital outlay every week. So just a word of caution, again, not financial advice, but just me being a trader. That's how I'm analyzing the situation. The next stock I wanted to bring up was FUTU. So I wanted to bring up FUTU because our signal indicates a bearish trend. And I wanted to see, and I didn't even do this beforehand. So I want to see how this matches up with the chart and then with Tradier's technical analysis. So we see on the 1 month chart here, we're looking pretty choppy, trading between $51 and $56. It looks like just last week we jumped up from 52 up to 54, which is about a 5% increase. And looks like we've got a small gap to fill here. So maybe that's where some of this bearish sentiment is coming from. When we go down to the technical analysis tool, I'm looking at the week. We're actually at a buy here for the week. It looked much better when we had the 15-minute sell signal here, looking at our indicators. But again, look at whatever indicators you're feeling most comfortable with. We're taking, for our watch list, the 67-day EMA, and we're looking for direction there. If 2 of the last 3 days are trending up and 6 of the last 10 days are trending up, we're determining bullish. If the exact opposite, then bearish. If neither, then neutral. So we're indicating bearish on FUTU here. The chart, again, as we see, is kind of choppy. We've got a buy signal here from the technical indicators. So again, make sure you're comfortable with your trade before getting into it. Make sure you understand what the company is, what it does, and that you would be happy owning 100 shares per contract if you were to get assigned. I just realized I didn't switch back to the chart here.
All good.
Okay, so the next stock I wanted to bring up was Beyond Meat, ticker BYND. We're going to look at the 1 month here. We're trending down in the last half of the month, it looks like. And if we look at the week technical analysis, we're at a sell signal. Now, I wanted to bring up Beyond Meat for 2 reasons. One, I was assigned shares of Beyond last week, so I'm currently holding 100 or 200 shares. I forget how many contracts I traded of Beyond. The second reason is I wanted to just demonstrate that Beyond is nowhere to be found on our hedged watch list. You can't see it, but on my screen, I just did a Control F and I searched for ticker BYND. It's not on this list. If I go to our unhedged list and I search for Beyond, it's here and it's not on our hedge list. Sorry, try to get that right there. Now, the reason it's not on our hedged list is because the premium payout for the capital need is too low. We're estimating a return of $7 here. Now on our hedged watch list, we're filtering out any stocks that are paying less than $10 essentially, because at that point, do you really want to risk your capital just to earn a couple of bucks? I'd much rather be, in this 60, 70, even 30 range. We see Coinbase is at 260 unhedged right now. Those are the ranges that we would much rather be in. So, when I'm looking at Beyond and thinking about the type of return that I could expect this week, I've got to make a decision here. And I haven't made a decision personally yet. But I've got to make a decision here. Do I want to continue to hold these shares, or do I want to sell my shares where they are now, potentially take a small hit, and then reallocate that capital to a security that's paying higher premiums? And I think that's what I'm going to do. While Dillon's editing his portfolio, I'm going to be trying to make that decision for myself in the background and see what I would replace it with.
So Ben, really quick, just to clear it up for our traders, let's take your situation specifically. So Beyond is no longer on the hedged watch list for the reasons you just explained. Since we're paying back some of the premium for the hedge, it's not necessarily worth the squeeze. So what would you say? Let's say you decided to not sell off the shares manually and just keep selling as the wheel would sell. So it would call for a call credit spread. Even though it's not on the watch list, would it trade? would it enter a call credit spread for you this week if you were to leave it alone?
If yeah, so we build in certain parameters to the bot. If the premium isn't going to be above $5, we're just not going to trade for you. Like we'll give a
Okay.
little, like we won't show it if it's below 10. We won't trade it if it's below 5 at the time of execution.
Okay.
Now there's potential where there's a stock that's not on our watch list because it's been filtered out for whatever reason that is still tradable. We're going to have a separate repository of all tradable stocks, which is coming this year for sure. But yeah, there is potential that, Beyond just doesn't trade at all for me today.
Okay.
And because of that, I'm looking at the watch list right now. I'll pull it back on screen. Beyond is trading at around $9. I think I got assigned at $9, which means if I sold out, I would have $900 to work with. I could repurpose that into like a Riot, which is just $500 more, and I think I've got some cash to spare in my account. I'm already trading Sunrun. I might look into GameStop. GameStop's been near the top of the list for a couple of weeks now, so there's some other options out there where I might want to reallocate my funds.
Gotcha. Cool. Thank you for answering that. I wanted to make sure because I know there are times where people will reach out and say, "Hey, I had a stock in my portfolio. I don't see it on the watch list. What's going to happen?" And Ben just answered it for you. If it's above $5 in premium paid, it'll trade for you because it's in our repository on the back end. If it is not going to pay that much, it will likely just not even go for the attempt.
Yep.
Okay. Cool.
So with that, Dylan, I'll hand it off to you. You can give an overview of your account, the new layout, and get your automated portfolio set up for the week.
Awesome. So I'll pull up my screen here, and yep, you're seeing it now live for the first time. Ben, we haven't shown this on this show, right? We haven't
shown it in many. We probably should have done a better job marketing the launch of the new design, but
we posted about it. But yes, you're right. So here is the brand new PeakBot interface on our app. Okay, so what we're looking at here is just the quick thing. We're in light mode right now. We got a lot of feedback, and internally, we our old app was just heavy black everywhere. This is our dark mode now. Okay, so maybe a little bit more resemblance to the old layout here, but switch it, go light, go dark. Obviously, you can see our homepage layout is a bit different, but the good news is it's the same old simple user experience. I shouldn't, not old, but if it ain't broke, don't fix it, right? As far as getting stocks added into your portfolio, everything is the same here. So I'll give you a quick tour of the app. Again, keep in mind when we launched it, it was about 95% done. Rather than holding on to it, we wanted to get it out here in the new year and just make sure our team is aware of, our community is aware that there are still some slight changes that are needing to be made and that will be made here. So on the PeakBot home screen, as you can see, this is our broker where it's telling us if we're integrated or not. And we now have a chart for right now that is tracking our premium as well as our realized gains and losses. If you notice any small discrepancies in your gains and losses, that is just let us know, but we're still working on the perfect formula there. We have all the data. It's just a matter of curating it and getting it live. So what you can do here is you can actually go back. You can select 1 week, 1 month, 1 quarter, and you can take a look at the different dates and how much cash that you accumulated in premium on those dates. So all that information is here for you. It gives you a bit more of a visual. Of course, we have our must-read guidelines down here as well. Nothing new there, just some great information for you to check out. We do have our pricing page. Of course, no pricing has changed here, but we have our details and our limits there. Great page for our bots here again, and you can switch it to light mode. All of our information that's found on our website, usepeakbot.com, is now within our app here on our 2 bots. So everything you need to know is here. Our watch list, the preferred watch list is still the Google sheet that we've been looking at. However, this one is also being updated. We just don't have all of the information that we've built out on this watch list here available within the app just yet, but it's coming. So, but in case you wanted to look at some of the basic information, this is here for you. And then, of course, we have our results internally. If you wanted to check that out for yourself, you have that information here with another chart and some basic info. And then our leaderboard, which also is going to be using or can use a little bit of work still, but all of the basic information's here. Ben, we got to get rid of this comma before it's just killing me. Anyway, all the data is here. These are weekly returns, the PeakBot Traders ID, and what stocks or contracts that they ran on the week. So a lot of good information here. I'm going to go back home, and I actually cleared out my portfolio for a few reasons. New year, just wanted to feel fresh, but additionally, I'm actually going to be trading the same stocks that I traded last week again this week, but I wanted to make sure I can show the audience the new user experience. Again, same feel, just in a different place. So we're going to click on Start New Automation here. So last week, I was assigned on two stocks or two contracts I ended up getting assigned. So those stocks were Upstart and Wayfair. So we'll take a quick look at the watch list here. So for Upstart, I like scrolling over to the detailed version for this exercise. So with Upstart, stock's currently trading at $40.86. I'm going to look and see if I can pull up. So yeah, I was assigned my market value or my current price for Upstart is $39.30. So actually, let's see here. Yeah. So my cost per share is $42 per share. That's what I got assigned at. That was my strike from last week. So we're trading at 40.86. This column, Ben, still being updated every 30 minutes, correct?
Yep.
Okay. Maybe for some reason that's not here, but we'll make sure that you're aware of that. But our strike prices for this week for Upstart, our sold strike at the 30 delta is 38.50. Our bought strike is 34.50, which means our max loss is 400. Estimated cash needed 38.50. That's paying a $75 premium. If you're on the put side, again, I'm going to be on the call side this week, but I wanted to make sure you have the info, and that's a 1.95% return. So as Ben mentioned earlier, technically this week, this would be outside of my normal range of 0.5% to 1.5% paid premium. However, since I now own the shares and I'm very confident in our bot and our strategy to execute for me, I'm going to be on the call side of things over here. So my sold call strike this week at the 50 delta is going to be $41.50. And my bought call strike is $46.50, which means I'm going to be collecting $113 in premium estimated, and we're looking bullish here. So I'm going to head over to the PeakBot app. I'm going to type in the wheel to trade that. Again, it's the same 3 steps here. I'll zoom in just a little bit. And then we're going to type in Upstart, enter the number of spreads. I'm going to hit 1. And just so everybody knows, advanced settings, the hedge is still already turned on for you. I'm going to hit activate, and this stock is now going to be added into my automated portfolio here on the left-hand side. So here's Upstart, $3,600 approximately. This number is not going to be exactly the same as the number that you see in your budget or on the watch list, but we're just trying to get you estimated, build in a little bit of a buffer, and get you a nice round number to make sure you have enough cash in there. Additionally, as I mentioned, I got assigned on Wayfair. So if we take a look at Wayfair here, Wayfair is trading at 61.70 approximately. I'm going to look at what my cost per share. My cost per share on Wayfair, since I was assigned 100 shares, is $63. All right. So keep in mind I'm on the call side over here, but just to run through it for you, it's trading around 61.70. Our strike price is on the put side of things, 59 and 55, which creates a max loss of $400. Here's how much cash I need. and that's paying a $64 net premium this week, which is about a 1.08% return. Now, again, I'm on the call side of things over here. So my strike prices this week, based on the 50 and the 20 deltas, I'm selling the 62 strike. I'm buying the 67 strike, which is paying me $130 in premium, which is also bullish. So I'm going to keep that running here. So I'm going to head back. We're going to type in the wheel, or you can just click the down arrow. It's still there for you. Wayfair. So Wayfair, adding 1, and we're going to activate. So then the last stock that I'm going to be adding is Affirm. So I traded that last week, just collected premium, didn't get assigned any shares on Affirm. So that's right here, right at the top of my threshold, paying a 1.4% return, trading around 49.14. Strike prices are 47 and 43.50. Creates my max loss. Here's my cash. And I'm getting paid $66, approximately $66 in net premium this week. So I'm going to head back one last time, add this stock, AFRM. We're going to add just the one contract here, activate, and I'm ready to go. So just keep in mind, you can also click view watch list. That ability is still there for you. We'll open up the new watch list. However, that's going to open this up into the watch list that is built in the app. So if you wanted to, Ben, maybe just put it in the comments, the link, the direct link for use peakbot.com/watchlists.
Yep.
And that will bring you directly to our interactive, if you will, Google Sheet, just because that's where all the data is. And again, we're building that into the app as we go here. So now this is my portfolio. I got AFRM, Upstart, and Wayfair all added into my portfolio for this week, first week of 2024. Hedge on. Maybe I need a hat or a shirt that says hedge on. Kind of like that. But so yeah, that's the new layout here. Same simple user experience, client experience. I gotta get rid of that word user. Yeah, just a couple more tricks and little things for you to look at, make you more comfortable with your portfolio. So that's it. That's it for my portfolio. So we hope you like the new layout. If you don't, you'll tell us and we'll listen.
We typically do listen.
We do. If we get enough people saying the same thing, there's reason for it, and we take action. There are sometimes suggestions that we take into consideration, but maybe we don't act upon. But that's just because can't please everybody, but we want to please as many people as we can. We want to provide them the simplest user experience to put a stock trader in your pocket and truly automate passive income. Again, reminder, I made 29% in 2023. Ben, correct me if I'm wrong. 9 out of 10 traders aren't going to make that return.
Yeah, you're trading yourself. You're likely losing money.
Right. So
say it.
Yeah, but it's the hard truth. So again, PeakBot should never be somebody's entire investment strategy, but it's the perfect supplement to any existing strategy. If whether you're just getting into this and you're looking for a way to generate passive income and you're not all that familiar with the markets, this is a great place to start. Even if you are active and you can look at your chart throughout the day or stare at it all day, no reason this shouldn't be running for you in the background. 2-week free trial, still available on our website. No credit card needed. Just connect it to your broker. We integrated with Tradier as our preferred broker. We also integrated with a couple other platforms as well. You can see that on our app. Yeah, Ben, as I always like to say, is there anything that I missed?
No, pretty comprehensive. If you don't have a PeakBot account, like Dillon said, start your 2-week free trial. Get integrated with your broker. We're integrated with Tradier. They're great partners with us. I automate my Tradier account. And in 2024, you'll see a lot more automation tools popping up in the market. Dillon and I have been at this since really 2020. And every year there's new tools that pop up, new players, and a lot of friends for us to make. But we still, based on Well, we know we're still definitely the most easy to use platform on the market. So if you're getting started with automation, this is the place to start.
Yeah, and among the most affordable, if not the most affordable platform to execute trades for you while you're at work, on vacation, in traffic, wherever you might be. So we appreciate you tuning in. We'll be back to Mondays next week.
Yep.
We will be live Monday morning, 8:30 a.m. Eastern for the new week. Wishing everybody the best of luck. Thank you so much, and we'll see you at the peak. Take care, everyone.